We follow the,
Go ahead. Sorry.
yeah, if we follow the teachings of God, we'll be like the wise man. We'll always be depending on his lead rather than our own.
That's true. That's one way of looking at it. That's good. What if you're a structural engineer or someone that does permitting for the city?
I think, like all parables, that the lesson depends a lot on the context of the listener. So I hear this as an academic and think, build your house on rock as opposed to building your house in the sand. I see people who look at the internet and get information on which to make life decisions from crazy people on the internet, and I see that as building their houses on sand. And then I see other people who look at the internet and go to authoritative sources and get really sound information, and I see that as building their houses on a rock. So in the current context, 21 centuries later, I think the parable is highly pertinent to me in the way I live my life, and that I try to live my life by finding sound information and making decisions based on sound information, and ignore all the nonsense that it comes our way in our daily lives. But as I say, that's a particularly narrow focus that comes from my particular perspective in my particular context and situation.
Okay. All right. Thank you. All right. Anybody else? What's happening in this? What are the facts as you see them? As you see them?
This is Donnie Carter from St. John's, Hollywood. The way I view this is the person that built the house on a rock protected the house from the rain and the wind. And the churches that have insurance protect their property. If you don't have insurance and you have a damage on your property, you don't have protection. That's the way I see it.
Okay. All right, let's move on to the action. What do you see as the action of this particular paragraph? I mean, this is not a straight off narrative, and so I know it was kind of questionable that I selected this as the Bible study, but I couldn't resist.
I think one of the biggest actions is that the floods came. I think we're experiencing that now. Where it is happening. Bad things are happening. Floods, hurricanes, earthquakes, all sorts of disasters.
Yeah. Okay. All sorts of disasters are happening. Okay.
If you build your house on sand, you should have more insurance. Was that the point?
That's going to be one of the points, actually. Especially here in South Florida.
Being that we dug up our church and it was on sand.
And it was literally on sand. That's right. Anybody else have what's actually happening? There's one place was destroyed and the other place lasted.
You have the two people too. One is listening and one is not.
Yeah. Okay, what is your personal response? What is your personal response to this lesson?
Well, I would say, and I'm Bob Bish from St. Mary's in Stuart, Florida, as a new treasurer, and this is the first time I've really taken a close look at the insurance that we do have. And so I'm thinking to myself, is this the right policy for us, given what's happening to us from a climate perspective?
Okay. All right. Anybody else? I mean, one thing that we've just to chime in with Bob there, we've, given what we went through, we now have a very active church insurance committee at St. Columba with attorneys on it, looking at the same question. Do we have enough coverage? Will the coverage cover a loss? Where are we in the code regulations? So that's my personal response to this. Lots of questions.
Yeah, it's Randy Smith, Grace Episcopal Church, West Palm. We have always had insurance. However, and we have 6 buildings. Nevertheless, because of the costs changing and going up, we have made some modifications. But making those modifications, we're ensuring that at least we can replace the church in the event anything occurs.
Okay, thank you, Randy. Okay, and so what action does this Bible study want to cause you to take?
Is there somebody from the insurance company on the call?
Yes, he will be
Yes.
on the call in 1 minute. In 1 minute. This is the Bible study that we always have at the beginning of these sessions.
Okay, this is Bob Pickup from the Chapel of St. Andrew in Boca. We don't have any buildings, so my call was more to find out about the liability insurance coverage and why the company doesn't payments until the check clears, which causes duplicate billings and duplicate payments, and so I'll wait for the insurance company agent.
Yeah, he'll be on in 1 second, as a matter of fact, but that's an action that you want to take. Anybody else on the action? Okay, so let's clear the screen and let's introduce Paul Stevens from Church Insurance. And he's going to be conducting a talk with plenty of opportunities for us to ask questions with regard to our particular situations in our congregations and in South Florida. So welcome, Paul. We're very glad that you're here. You're taking time out of your Saturday morning to meet with us.
Glad to be here. Thanks, folks. Good to see everybody. I'm Paul Stevens. I'm the Regional Vice President of Marketing, Risk Management, and Client Services for the Church Insurance Agency Corporation. I thought I'd start with a quick overview of the renewal, the highlights of the renewal, which happens coming up here shortly on October 1st. And the first thing I'll let you know is that the average or that insured property limits in the Diocese of Southeast Florida are now approaching $500 million. We're at 443 million total insured limits. That's property limits, that's buildings, contents, the things inside the buildings, insured by church insurance in the Diocese of Southeast Florida and its congregations and missions. So we're getting close to $500 million of property risk. The average premium increase this year is 1.13%. To put that in perspective, the average industry increase across all lines of commercial business is 8%. So the church insurance company is performing the way it's designed, which is to keep premiums beating the market and to continue to offer coverage that otherwise is hard to get or sometimes unavailable. Malicious attack coverage and cyber liability, while not part of the church insurance company package, is still provided to every insured. So if we insure you for property and casualty, we automatically place malicious attack coverage, which is active shooter, and cyber liability coverage, which is hacking. There's no additional charge to the church for those two lines of coverage. It's a benefit of being in the program. And the last highlight, which is really the big change across the industry worldwide, is the communicable disease exclusion has been added to all policies. So this is a response to COVID-19. It's the way that the reinsurance market makes it crystal clear that there's no coverage for communicable disease. So you'll notice that exclusion on your policy when it renews October 1. That's the biggest change. But like I said, we're not unique. This is a worldwide change. It's uninsurable. There's no carrier out there covering it, no reinsurer covering it. So What we have across the industry is a communicable disease exclusion. That's the highlights. With that, I can open it up to any questions you have.
Yeah, I've got a question. This is Bob Pickup. I'm the treasurer of the Chapel of St. Andrew in Boca Raton. And it's 3 questions really. First of all, I didn't get your name.
My name's Paul Stevens. It's right here on the screen.
It's not on my screen.
Oh,
How can I contact you directly?
I'll send that out.
Okay.
Yeah. It's in the email. I'll send it out again.
Okay. Paul, I've got 3 questions. First of all, we've run into a situation where it seems the policy is that our check is not credited to our account until our check actually clears the bank. We pay bills twice a month. And what this policy causes is by the time you bill us again, our check has not cleared the bank. So we get a bill for 2 months premium and our administrator pays that, and our payment stream becomes very confusing for her. Why is the policy that you don't credit our account when you get our check, but only when the bank clears the check?
Well, Bob, I'm unaware of the details of our billing methodology, but I can certainly put you in touch with the manager of the billing department who would have the expertise to answer that question. If you want to give me a call on Monday, I can put you in touch with Kelly Best.
Kelly, okay.
Yep.
The second question is our congregation, our parish, our mission, if you will, has got about 35 attendees. We hold our services in the chapel on the campus of St. Andrew's School in Boca Raton. We have very little activity, but our liability insurance premium approaches $9,000, which seems wildly out of context with the risk. Who can I talk to about that?
Sure. If you want to give me a call on Monday, we can pull up your file specifically and take a look at it. What I would point out to you about liability is we have in our liability policy, it's a very rich coverage. It includes things like sexual misconduct coverage at $1 million. It also includes excess liability of another $1 million, includes directors and officers liability coverage as well. When you start to bundle high risk coverages, specifically sexual misconduct and or employment practices liability, premiums can get quite up there. Now, what we could always do, as I understand it, you own no property. So this is a pure liability risk. So what you could do, and I could help you do this, is we could test the market. We can go out to the market and get a quote from some other carrier, because while no one wants to write property in Florida, they'll all write liability. So there's options out there, and we could test the market and see what the market rate is. But generally what we find is that our rate's going to beat the market. But I'd certainly kick the tires with you if you want to give me a call on Monday.
Great. And then the third difficulty that we're experiencing is obviously we pay both the comprehensive insurance premium and our health care and premium. Mm-hmm. And we find that 2 or 3 times a year, our comprehensive premium is credited to our health care. And consequently, our 2 coverage billings and work streams get confused. And we're told that the health care department can't credit our comprehensive, but instead we've got to send a second check for the comprehensive and wait for the health care to give us a refund.
Yeah,
if that was a little bit smoother, that would be beneficial.
So again, what we have here, 2 separate companies. The health insurance company is a separate company than the church insurance property and casualty company. So those 2 ledgers do not meet. But the answer ultimately is it is a 2-check system. So you don't want to commingle and send 1 check and say, break this out for health insurance and this for property and casualty, because those 2 systems are not connected. And those 2 companies are not connected, other than we're sisters. We're both report to the same parent, Church Pension Group, but from a system perspective and ledger perspective, they do not communicate. There's So you'll definitely, it is a situation where you have to send 2 checks. Now, when you call me on Monday and I put you in touch with Kelly Best, bring that up with her and ask her if she's aware of any other workaround to that, but I'm certainly not. I do believe
Thank
it's a
you.
2-check system.
Thank
Okay,
you, Paul.
thank you, thank you.
Thank you.
Okay, so someone else have a question? A
Frank Harris.
concern?
In Lewiston with St. Martin's Church, I have a question for you.
Okay.
We're a very small congregation. We have 12 members approximately that come. And when we get every Sunday, and when we get a $10,000 bill and a budget of under $50,000, it's kind of hard to pay it and keep the church going. Any options available to us?
So the bottom line with insurance, as you know, is you can always test the market. And that's something, this is not a mandatory program that people are forced to be in, although the diocese would want to look at anything you're considering to make sure that it's at least as good as what we offer. But that's really a situation where you go to the market and test it. Now, like I said, I know folks out there that'll write liability. I don't know any regulated company or company that is managed by a state that's offering property. The only thing I've seen in Florida property wise is surplus lines, excess lines, things where, the first page says we're not guaranteeing that we'll be solvent at time of loss. So there's not a lot of options in Florida as far as property goes, but you could certainly test the market yourself and see if you could beat the rate. But what we have to do is we have to insure the building at replacement cost value. So a lot of times we'll see, and I'm not familiar with St. Martin's without pulling the file up and looking at it, but and a lot of times we've got buildings that were built for 200 people on a Sunday, and now we're down to 10. But the building to replace would still cost millions of dollars, and we're writing it at a replacement cost value, which drives the premium. So that's really kind of where we're at. And that's not unique to Florida, that part of it. We've got churches all across the country that don't have the ASA that they once had, but they still have the big building. And as you folks know, the building is the gift that keeps on giving with maintenance. So there's not an easy answer to that, but you could certainly go to the market and see what you could find. And then if you want to bring that back to me and have me do a side-by-side comparison of what you have versus what's being offered to you, I would be glad to do that. I do that every once in a while for folks when they ask. And then if it went further than that, you would just have to go to the diocesan committee for approval to make sure that that policy was solvent.
Okay.
Paul, I have a question, and this is with regard to the, because I think there's confusion among churches with regard to the word replacement. I know that that is confusion that we have experienced and are currently experiencing at St. Columba. And when we heard the word replacement at St. Columba, and we thought that it meant replacement, to the current code of 2021. There's a misconception, I think, among churches, or at least we had this at St. Columba, about what exactly replacement means.
Sure.
Replacement means, so replacement for us, we learned meant to the current code of 1960, which living in South Florida, as you know, we have lots and lots of codes written all the time. And so if you could address that word replacement and then also talk about what that means for a church and ways to be prepared, because we experienced great hardship from a misunderstanding around this word.
Sure. So replacement cost is a defined term inside of all insurance policies where replacement cost coverage is provided. So we provide replacement cost coverage. If you look at your policy, what it tells you is we're going to replace your property with like, kind, and quality to its current specification. So what that means is if I have a 10,000 square foot rectangle, that was built in 1960. It doesn't have sprinklers. When it blows down and it's built out of stone, local stone, slate roof, whatever the case may be, we are going to replace that building to what it was before the loss. That's the best way to understand it. Now, what you're getting into is a extension of coverage, which included in every policy we write, called ordinance of law. And that's a fancy way of saying codes coverage. It's $250,000 for everybody has that on their policy. And you can buy additional amounts if you think it might be low for your situation. But in our experience, insuring 5,900 churches across the US, we don't typically blow through that limit. It's possible. You get into buildings up in the colonies that were built in the 1700s, you might see those folks buy up to $1 million of codes coverage because the codes are going to be significant. But generally, statistically, we haven't bumped through that limit very often, but it is available to you to buy an additional limit. Everyone has 250,000 built in. What does ordinance do? So I just said replacement cost says we're going to put that building back the way it was before the loss. This is the concept of insurance, indemnification. You don't get ahead, you don't fall behind, you get exactly what you had. That's the concept of replacement cost coverage. Now, ordinance says if there's a code that's changed, so buildings built in 1960, it blows down today, obviously the codes are different, we're going to pay up to $250,000 additional in the policy for the codes upgrades. And that's how it's handled. But replacement cost is a defined term within the insurance contract. So if there's any confusion, go ahead and give me a call. We can go through the policy together. But it's basically what I just said. You're going to get new for old. So the roof blows off, they're going to put a new roof on. But if it didn't have a sprinkler system in it and now it needs it, we're going to look to codes coverage for that. And like I said, we've got $250,000 on each policy for that.
So what would you recommend? What would you recommend in our situation in South Florida, where many of our churches are right on the coast? They were built east of 95. They're all extremely vulnerable. Many of them are extremely vulnerable. And we were one of the churches, we blew through that $250,000. It didn't even touch what we've had to do because of our code upgrades. And so we were kind of caught flat-footed, which I suspect many of the churches in our diocese on the east of 95 would also be caught flat-footed because of the number of code upgrades, of having FEMA down here, of having flood insurance, etc. How would you suggest that we have a lot of treasurers online here, we have members of the vestry, how would you suggest, what would be the best way to make an analysis of that code question?
Okay, so the recommendation of the company is built into the template. It's $250,000, but that's applicable across the country. So it can be different in your locale, and it sounds like it is. The best course, so trying to figure out before a loss happens what the code impact will do is really hard to do because there's a couple moving parts there. You don't know when the loss will occur. So you could say today, here's what I think all the codes would be, and it equals X dollars, we estimate. Give me that limit, Paul. But if the loss happens 10 years from now and things have changed, you may still be short. So I would say the best course for you folks from an insurance perspective is to get optional quotes. And I would you can call the 800 number and they'll quote this stuff for you. But I would look at bump it up from a 250 to a 500,000 and see what the additional premium is. And then maybe even look at the $1 million limit as well. And this is just due diligence for a vestry. Hey, we thought about it. We got quotes for it. We looked at it and we voted on it. Now, to determine what your exposure is, because it's so local, you'd probably want to bring in an expert who's local, maybe a contractor who's done work for you, things like that, and say, what kind of codes would I get into if I had a total loss today? That'd probably be your best expert, would be someone local, a builder, someone like that. Or maybe even the municipality, that might be the cheaper route. is ask the municipality if there's someone from like the buildings department that can come take a walkthrough and say, hey, if we had a total loss, what type of codes would we fall into? You know, you're going to fall into generally sprinkler, handicap accessibility. Now in Florida, where you're at, they may get into things like raising the elevation. That's super unique. You don't see that anywhere really. That's unique to you folks. So that type of thing, if they start talking about, we're going to raise the building 8 feet, you're getting into some serious dollars that most churches don't have to contemplate. So I would start, I think my best suggestion for you, Deborah, would be start with the local municipality, whoever is in codes enforcement, have them come out and give you a little walkthrough, have them put a number to it if they will, if they can. And then the best thing though for a vestry is just do the due diligence with the insurance company and get the quotes.
Okay, thank you.
You're welcome.
I just wanted to ask that question just to put that out there for the churches.
Sure.
I have another question. If someone has a question though, I'll hold back on my question.
I have a question about that, if I could follow up. So how does the insurance company determine after there's a loss, how much of the loss is attributable to replace what was there and how much is attributable to code changes?
It really comes down to the trigger. So let's think about your most likely scenario in Southeast Florida. It's weather related, right? So the trigger of the claim is there was a physical loss to my building. Let's use the example, the roof blew off. Once the roof blows off and a contractor comes out and you go to get permitted through the city's going to step in and go, yeah, that's great. Here's the book. Now your contractor's going to go, I can put the roof on, but before I do that, the city requires we put sprinklers in. Company says, wait a minute, we don't cover, there's no sprinklers there currently, so it's not part of replacement cost. So that goes to the ordinance of law bucket, which is the $250,000. But it's all determined at time of loss, and it's generally when you go to apply for your permitting. And the contractors are well versed in this in your area, of course.
So at the claim time, the insurance company is depending on the contractor to tell them what was original and what is new has to be added to comply with code.
Well, we know what's original because we've got appraisals on the building. So we know if a building has a sprinkler. We'll also know at time of loss when we investigate the claim and our adjuster walks through, they're going to go, okay, there were no sprinklers here. This building was built in 1950. It was not handicap compliant, but now it will be. So we're going to pick that up ourselves. Contractors are going to pick it up as well. I've got one going on in another state where we've picked up all the big stuff, but as they start to finish up their punch list, they find out, hey, you know what? The hood over the stove is out of compliance. So we have to reopen the claim, pay a little more on that. That's typical. Generally, the contractors, the municipality, they'll hit all the big stuff. And then as you get to the end of the yellow brick road and you're doing your punch list, they'll say, wait a minute, you can't have this hood over this stove, or you have to have an Ansel system. You didn't have it. Again, those are codes coverage, not a problem. Up to the limit of 250. But to Deborah's point, when you start to add all those things together, you just want to make sure you have a significant limit. So maybe 250 isn't enough for some churches, maybe for some it is. But I hope that answers your question.
Well, the question was preliminary to a comment, and it was what I sort of expected. So this is a difficult process you go through at the time of a claim to, even down to the point of a hood over an oven or something.
Yep.
It's a difficult process for you with all of your resources to do that. And you're expecting a church with 12 members that come every Sunday to do that in advance and predict that for the future. The point of insurance is to not do what we're doing here, but for the insurance company to put its resources in, use its actuaries and predict the future and tell that congregation of 12, look, things have changed. Here's what you can expect on average. And you should get this much insurance. And you have done that. You said 250 covers, it's a nice number for the United States as a whole. But there are a lot of churches in Florida, I think, and all the churches in Florida, or almost all of them, are suffering the same thing. Congregation getting smaller and smaller. We need that service. We need you to do what I perceive to be as part of your job, And that is, you've got the expertise, you've got the actuaries, you've got the data in your databases. Tell us, look, you know what South Florida is like, you have the data. Tell us, what do we need to do? How much should we buy? And you can't expect a congregation of 12, 80-year-old Episcopalians to go and do the kind of research that you guys are capable of doing and should, I think, be doing for us.
Well, like I said, our research is broad. So it's 250,000 is what we think is a good pick for most churches.
Across the country.
Problem we have ultimately, Ron, is this stuff is done municipality by municipality. So there's no insurance company out there who has the expertise to know what every little municipality across the US codes are. That's something that's local. So while we can make broad assumptions based on actuarial data with large numbers, we can't drill down into the specifics of any one municipality with any true expertise. So my honest opinion of that is your best answer is going to be someone local who can tell you that. Probably the city.
I understand it. By the way, I should tell you, I used to teach actuaries. I'm a statistician. So I understand that point, but 250,000 is a nice number for the United States, but you do a lot of business in South Florida. Put your actuaries to work doing not Marathon, not Key West, not Alamorada, but South Florida, and help the people in South Florida, because things vary from Marathon to Key West to Miami to Fort Lauderdale, but South Florida is a big enough base and there are enough churches and enough experience and enough data. It's a matter of turning your actuaries loose and giving them that assignment. And that would provide a huge assistance to these churches in South Florida that they're totally incapable of doing on their own.
Well, I can definitely, Ron, if you want to reach out to me next week, I could set up a call with you, me, and our actuary and see what he can drill into. Now, what we have to do, though, you know, obviously the insurance company is here to serve. We're an arm of the church. You know, we're a nonprofit church insurance company owned by the Episcopal Church. So we really respond to what the client says. So if the bishop says to us, for example, I want everyone to have $1 million of ordinance in their policy, we'll do it at the drop of a hat. You know, there's an additional premium for it and everybody would have to buck up for that. But so we have no issue of changing that type of limit. But if you want to reach out to me, I could certainly get you on the phone. Our actuary's name is Rob Flannery, and he's actually in Florida. He's up in Jacksonville, but he's our actuary, does all the reinsurance stuff like that. He'd be probably a good resource for us to talk this over with. And then from a larger perspective, like I said, depending on what Rob would bring to us, we could present it to the diocese and say, do you want to change your template of coverage?
Cool. I think that would be a big help to, you got to have sympathy for a congregation with 12 people who show up every Sunday and they're sitting in $1 million church.
Absolutely.
So thank you.
Yeah. No, that's the biggest point, you know, for a lot of churches is they have these buildings that were built for a different time and a different size average Sunday attendance. And you all know it because insurance is just one thing. Maintenance of these beautiful big buildings. You know, like I say, it's the gift that keeps on giving. So we're always thinking about that. We always are trying to, you know, give everyone the coverage they need, not too much coverage. We don't want them to have to pay things they're never going to, you know, likely encounter. But by the same token, there are differences. Not everything's exactly the same. So to Deborah's point, her church required more than what the norm is. And so we have to respond to that. And generally the way we do that is case by case. But if you give me a call, I think we could get Rob to give us some interesting information about Southeast Florida. At least he could get started on it, look at it, because he could pull up some data. He's got industry data as well.
Sure.
Okay.
Thank you, Ron. Does someone else have a question?
I guess I do, Deborah.
Yes.
One more. As the new treasurer, I'm learning this process. Leanne sent me a copy of our policy, and it sounds like, Paul, you're at the VP level. Is there somebody in between that we should be familiar with if we've got questions as a follow-up to this?
I'm your face. So the way it works is Leanne is my right hand. She works in the service center. There's eight or nine of those folks that work in the service center. another 4 that work in what's called the Appraisal Center, doing renewal reviews, things like that. They ultimately all report up to me. But from a church perspective, if Leanne's your first contact, if it's something that's over her head, comes to me. And in normal times, I travel 80% of the time, a lot in Florida. So a lot of my life in normal times is walking through churches, risk management assessments, meeting with vestries, things like that. But Leanne's your first contact, and anything over her head comes to me, and she's really good at looping me in when it's something that's beyond her scope.
Okay. As a follow-up, we've just completed a renovation of our largest building, the interior of our largest building, and I don't think anybody's looked at the insurance consequences of that, and so that's going to be one of the things on my list. And I'll start with Leanne.
Sure, and you'll ultimately end up with, you can call me direct on that, because that's in my wheelhouse, halls and walls. So the first thing I'll ask you, Robert, about that is, did you add square footage to the building, or was it renovation to existing space?
Yeah, it was renovation to existing space.
Okay, so give me a call. We'll walk through it. Generally speaking, though, it's not going to have much of an impact, because all this stuff comes down to cost per square foot, and we're insuring it. What's it going to cost to replace old with new? So our coverage and rates are already contemplating new, which what you've done is you've replaced it yourself, i.e. maintenance. So it may not change the value of the replacement of the building because the footprint hasn't changed, unless you've added features like, if you said to me, we just installed a $500,000 pipe organ, that would increase the value of the building. We just installed $1 million of stained glass, that would increase the value of the building. If you said to me, listen, we got new paint, new carpet, new cabinetry, probably won't change anything, because the system already contemplates that's what we're going to buy you if the building is lost. But give me a call, I can walk you through that.
Okay, great. Thank you.
You're welcome.
Yeah. Another question for Paul? I have 2 more questions then.
Sure.
My question is this. If you do make significant upgrades to your building to bring them into code compliance at the current time, will churches be able to see a reduction in insurance rates? So here, for example, at St. Columba, because we are now going to be in compliance with the 2021 regulations, including the FEMA regulations, because we were built to the newest regulations. We have had to put in flood panels in all of our doors and windows, which was a significant cost, to have to do that. And so I would be expecting, based on living in the Keys and working with our insurance company as a homeowner, that when you do significant upgrades on your home, you do see a reduction in insurance premium, so that we might be able to get a template or a punch list for churches. And we would say to them, look, if you do these, like 5 things, or if you do these 10 things, you can see a reduction in your premium because you're upgrading your building.
Sure. So what I would tell you is to send me that information of what you've done, because that is something I'd want to present to the underwriter. As a client advocate, I would make the case that the risk has been improved, and generally I'll win that. I'll give you examples of simple ones. Obviously, somebody adds a central station fire burglar alarm, there's a credit for that. That's across the industry, it's pretty simple. When you get into specific things like what you're talking about that are to your church, that's something where I have to make the case to the underwriter that the risk is improved. It seems easy to do. So if you want to reach out to me with that information, and to the broader group, anytime you've improved the risk, let me know, because I'll go to bat for you. Now, I don't want anyone to be misled that by doing the upgrades, it's going to pay for itself. It never does. I'll be an honest person. I'll tell you, it never does. The other thing I'm going to tell you too is it's very unusual that commercial property rates, which is what's driving premium in your neck of the woods, are ever going down in Southeast Florida. Now, we did see it with our own company last year. Well, like this year, I've got 29 folks, 29 churches in Southeast Florida that are getting a 0, meaning no change. That's very unusual. They're not even getting an inflationary change. If you look at the average increase in the diocese, 1.13%, it's not even inflationary. Okay, so we've got the ratchet to the rates because we know what the impact is on church budget, and we're a nonprofit carrier. So we're just looking to make enough to pay our premium and build our surplus for a rainy day, no pun intended. But the answer is, if you've improved that risk, let me know. Let me go to bat with you, for you with the underwriter and see what kind of credit they can give you. So generally you'll see some reduction, but you're never going to see a big enough reduction where you say my rate has gone down, because they're going up every year. Now, obviously they're going up less with us than the broader market, mainly because we're set up as a single parent captive insurance company owned by the Episcopal Church, and we don't have a profit motive. But yeah, anytime you've improved that risk, send it my way and let me get it in front of the underwriter, see what we can do for you.
Okay. And the next question I have is, it's my understanding that each congregation has the option and the opportunity to invite church insurance to come and do a walkthrough of their church. And I think most churches are not taking advantage of that. They're only going with the kind of like the mandatory walkthrough that comes along every once in a while. But how would the churches go about inviting, I guess, I'm not sure if it would be you directly or someone from your staff to come in and do a walkthrough, meet with the vestry, what's the process for that request?
Sure. So that's simple. That's me. And you can go direct to me, or you go through Leanne and she'll track me down. But here's the rub. There's two things. You're talking about two parts of this. The first one, which is the easy one, is what we call the insurance review. And typically in non-pandemic times, that would mean that I would be meeting with you on a Tuesday night at your vestry meeting, and we'd do a review of the insurance coverage with the vestry. Folks would ask their questions, get everybody on the same page. And that's just a simple request. Generally, I would be, I'm generally in normal times, I'm in Florida quarterly. Okay. Now, pandemic has given us an opportunity, and I think we're using it right now, Zoom. So I haven't been able to travel. The company's not allowed us to travel since March of 2020, and we're still grounded. But I've still continued to do insurance reviews with vestries via Zoom. So I would say anybody, no matter what, anytime, if you say, hey, we want to have a review of our coverage, Paul, that's easy. We can get you on the books right away. We can Zoom it and cover the ground just like we would sitting there in person. Deborah's right, though. The second prong of this, which is the risk assessment, the walkthrough of the physical plant, haven't been able to do any in 18 months. I expect that we'll be free to travel early next year, maybe sooner, but I'm not that hopeful based on what I'm seeing and what I'm hearing from the company. But the broader question, in normal times, I'm the guy. But I invite you we can always do the risk assessment once I can travel, and you give me a call and I get down there and put you on the schedule. But don't hold off on the review of coverage, because a lot of the questions I'm hearing today, we could handle in a review. Okay.
Yeah, that's why we're having this meeting. I want to really spread the word so that people are prepared.
Yes, I appreciate it. It helps us. My goal is that everybody understands their risk, that they understand their buildings, that they understand typical church exposures that we all have, and that we do the best we can working together to protect people and property, provide the broadest coverage possible in a financially sustainable way. So I share that goal with you, and I invite you folks to reach out to me whenever it's convenient.
Paul, I'd like to make a quick request. I'd like for you to address the difference between you guys coming in doing an insurance physical assessment and inviting the local county tax assessor into my home to do a physical assessment. Sure. You're a nonprofit.
This is a good question. First answer is we're both looking for two different things. So the tax assessor, a lot of your taxes are going to be based on what's called the market approach. What's the house worth? What's the worth? What could it be sold for? What are other specs, they call it? What are other locations that are like this going for? That's a property assessment. When I do a risk management assessment, that's a walkthrough. I'm looking at safety. I'm looking at, is it a safe place? The other part of that, which I think Ron's getting at, is we also do a building appraisals. Now, we do most of that from our desk now because of Google Earth, and we have histories on every church. We've insured almost everybody for a long time. So we've got appraisals going way, way back, and we do an appraisal on every building we insure, which is almost 15,000 buildings. Every 3 years we appraise them. So we're pretty wired on what the replacement cost of a building is. And we've got historic data, and we've got current data, and we got satellite imagery. And believe it or not, we get tons of great interior pictures off your Facebook pages, which are really helpful. But to Ron's point, when you get a building, you get a tax assessor out there, well, you know the drill. They tell you your house is worth $300,000 in their view, that it's worth $700,000 on Zillow. And that's because they don't want to assess the full amount on you because they'd have a riot. But it's apples and oranges. Ron knows it. He's laughing.
I have another question.
Sure.
And
Debbie.
that question is, there's a differentiation between not the copay, but the deductible that a church has to pay if there's a named storm event.
That's right.
And if there's kind of like something else that would happen. And would
Sure.
you address now the current percentage and also clarify for everyone that this is not just per policy, it's per building.
Per building, which is ultimately a benefit to you so for example, let's unpack that a little bit. The first point, I'll start with the end of that. It's a per building deductible for named storm and flood. Now realize we're the only carrier out there that provides any flood in the base policy. Everyone else excludes it. You buy it through FEMA. We still provide $1 million. It's not a lot, more than nothing. And it's built into every policy we write, but it has a 2% deductible. 2% of what? 2% of the property limit. So let's say we're insuring $1 million of property and it's one building. That deductible is $20,000 for a named storm. Okay. If you have 5 buildings, they all have a 2% of their limit. So one's a rectory for $200,000. It's got a 2% deductible. So 2% of 200,000 is its deductible for named storm. Parish hall, 500,000, church, $1 million, but it's by building. That's Deborah's point. Now, the reason that can be a benefit for you is many times we don't look at total losses, but we get a call, hey, we lost the roof to the parish hall. If we were taking all 5 buildings, adding it together and multiplying by 2%, it would be a super high deductible versus if we just look at the impacted building. So that's why it's done by building. Now, 2%, is that good? Is that bad? Well, I can put it in perspective. It's what the market will bear. Our reinsurance treaty won't go below 2% for named storm. Now, years ago, this is going back at least 3 years, those things had crept up and they had gotten to 5%, 7%. There were people with 10%. And what that was the result of is a couple decades of good luck in Florida where the wind didn't blow and folks calling and saying, what can I do to reduce my premium? Well, the first thing anybody ever looks at is their deductibles. So they say, what about this deductible on named storm? We haven't had a storm. My building's indestructible. Let's get a higher deductible. And we did that. And a lot of churches did it. And you got people into the 5s and 7%. And then the storms came in 2017 and people did not have the fund. And a lot of them were shocked because the folks sitting in the vestry today weren't the folks that made the decision 10 years ago to raise the deductible. So this stuff all blew up. We were called down by the bishops of Province 4 to meet with them to address this in 2017. And what the conclusion of the bishops is we want that deductible as low as the market will bear, meaning whatever you can get from the reinsurance carrier, the lowest deductible, we want that mandatory on all our policies. That answer became 2%. We moved everyone to 2% as they renewed in 2017. That's where they are now. Now, in Southeast Florida, there is an exception to that. If you go, there's some big churches down there that'll have a deductible higher than that. But the only way that they can do it is they have to get the approval of the diocesan committee in writing to us, because we're mandated by Province 4 bishops that they don't want to be surprised again. They don't want churches to make decisions that ultimately don't work out unless they know about it and unless they can see that that church could actually handle that hit. But that's a good point. The last thing I saw in Florida, I'm looking at a policy for an insured in a different diocese. They're north of you, and they're not in the program. They're one of the few not in the program. They are with a non-admitted carrier, a surplus lines carrier. Ron knows what that means. They have, and usually a surplus lines carrier will have some decent terms on their policy because it's high risk. There's no guarantee you're going to get paid. So the policy can say whatever it says. But even in that case of that one, they were at a 3% deductible. So it looks like we're beating the market that is surplus lines, which you would think would be able to beat anybody because the coverage may not ever come into fruition. But I hope that answers your question. We're at 2% per building named storm. Name storm, wind, hail. You also have sinkhole collapse, which is a big deal down there. That's built into every policy as a 2% deductible. And that, like I said, flood as well. There's one other deductible on your policy called all other property. And that's the one I always encourage people to look at, because when you go, okay, well, what else is there for a church in Southeast Florida? What else is there besides flood, name storm, wind and hail, sinkhole? And the answer is all other perils. And the big one, fire. All right. So I'll give you an example. I'll have a church that has $1 million building. So that means they have a $20,000 deductible for name storm. And then their fire deductible, they set at $1,000. And I'll counsel them and say, does it make sense? And Ron will understand this actuarial stuff. It's more likely where you sit that you're going to have a weather-related loss someday than a fire loss. That's just the statistical truth. But what I see clients doing all the time is buying the lowest deductible available for fire when their deductible for the thing that will happen is much higher. And so my suggestion of the best balance of premium and coverage is increase that fire deductible from $1,000 to $5,000, save a couple grand a year, shoebox that money into a fund. If you can, and I always look for a 2 to 3 year break even period. Ron knows what that means. I feel like I can be lucky for 2 or 3 years. Okay. And if I can save that money and put it in a shoebox and cover that fund, I feel like that's a good bet. If it gets beyond 3 years, I tend to shy away from it. But I encourage all of you to look at your all other property deductible and compare it to your named storm deductible and say, does it make sense that I have 20,000 on the thing I know will happen and 1,000 on the thing that statistically is less likely to happen? And I suggest there's a place in the middle that is the sweet spot.
Thank you. And I know we're right at our time right now. In closing, I would just like to ask one more question and then close up shop, and maybe we'll be able to invite you back because this is church insurance is one of the highest expenses that our churches are paying. And for churches that are operating on the knife edge point of closing or staying open, this is a very serious topic. I think well worth our while. And so just in closing, just because we're still in hurricane season and things, after a storm blows through and you see that you have damage on your property, what are the first steps that that one should take following a storm?
First step you should take is to call us so that we can open the file on a claim file and assign a local adjuster to get out there. One of the big things we do, that we focus on, because it's really a big ticket item if you don't do it well, it's getting out there quick and securing that building. That can be tarping the roof. You know, we got a lot of action out of Ida. New Orleans, but surprisingly, most of the action up in the tri-state area, New York, New Jersey, Rhode Island, places like that, Pennsylvania. The key to any weather-related claim or any big disaster claim, fire can be the same way. Call us right away. We're open 24/7 for claims. Let us get an adjuster out there. Let us get tarps on that, because if that doesn't get tarped right away, that claim escalates exponentially. You start to get mold, you start to get water inside the building, damaging the contents of the building, the interior of the building. And these are things that can be drastically lowered if we can get out there quick, but we count on you to call us right away. So that's the answer. Call us right away, 24/7, middle of the night, doesn't matter.
All right, thank you.
You're welcome.
Well, I want to say thank you very much for attending our Congregational Vitality information program. You know, thanks to everybody, all the treasurers, vestry members, junior wardens, and we think we have learned a lot through our saga with Irma, and we invited church insurance so that people can benefit from what we've learned, and also to be prepared for the future, particularly with climate change. And so we'll be having another program on church insurance, as it's our big ticket item. So, you know, I hope you all have a wonderful day. Jody will be sending out resource materials following this program to everyone that has registered, and that will include Paul's phone number. So
That's right.
God bless you all. Go in
Thank you
peace.
so much.
Thanks for coming on a Saturday.
Thank you
Thank
very
you,
much.
Debbie
Thanks
and
very
Jody.
much. It
Thank
was
you.
very
you.
helpful.
folks.
Okay.
Bye-bye.
Bye-bye now. Bye-bye. Thank you.
Bye now. Thank you.
Hi, Ann.
Bye, guys.
Bye-bye. Bye-bye. Thank you.
Bye.
Bye.